This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning and we are as always coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Reema and Nigel. Morning guys.
Hi, good morning.
Things,
Waiting for you to speak.
I mean, things are looking a little tricky, right? I mean, around the debt ceiling, no progress. Markets are worried. Politicians are saying, don't worry, but markets do their own thing. And I think that's exactly where we kind of kick off from. So let's just run you through what you need to know as we begin another fresh trading session. So there was little progress on the deadline, the debt deadline, and that weighed on markets. So we were saying yesterday, same time, how, I mean, the prior session, US markets for the first time in many weeks were a little worried. And that worry at the margin did continue. So US House Speaker, who is, of course, the main man negotiating with the US President, the leader of the Democratic Party, is Kevin McCarthy. And he basically said, this is a statement which came after market close, after the market had already ended lower, that there should be no fear in the markets. I mean, these were Bloomberg headlines which came through. This statement did lift US equity futures a little bit, but did not really unwind bulk of the sort of heaviness or the damage that we saw during the cash market. So, I mean, during the session, US markets were lower, the S&P, the NASDAQ. I mean, to be sure, on the NASDAQ especially, the tech stocks, there was a bit of a lift which came through in the last couple of hours of trade, but they ended firmly down, 0.75% down on the S&P, the NASDAQ down about 0.6%. Now, the other thing is that, markets are very rapidly pricing out rate cuts, and they're pricing in rate hikes. And this is kind of a constant thing we've observed for the last year and a half. Markets get very ahead of themselves, start to say, well, inflation is done and dusted, and the peak is in, and the rate cuts will start at some point in the future. And that has always, at least there have been big 3 or 4 instances in the last year and a half where it is unwound. The 10-year yield now is at about 3.74. It went up a little bit. The dollar index is now knocking close to the 104 level as compared to the 101.5 we were not very long ago. And this is, I mean, the dollar, of course, is also a function of growth dynamics, right? I mean, if you look around the world, Europe growth is nothing to talk about. China has noticeably weakened. And the one economy which still continues to be pretty resilient is the US, and that's the dollar for you. Okay, let's just come to the market here. So the global handoff is not all that great. It's not all that positive. The Nifty and the Bank Nifty both ended lower. The broader markets were a little better. If you look at the S&P, if you look at the mid-cap index, the small-cap index, those indices were up about 0.25%, respectively. Advantage decline overall yesterday was about 1:1. But, I mean, the advantage is still very much with the bulls, with the number of stocks which went up in the broader space, supported by volumes, as opposed to stuff which went down on little volume. So I would still go with the fact that the advantage is with bulls. On the index, I mean, if you're just looking at the Nifty and want to take a trade, the pivotal level still remains a 20-day moving average, which stands at 18,198. And I've said this yesterday, day before that, that is the short-term trailing stop loss, trailing reversal kind of level that you need to keep a close eye out on. And that is about 100 points away from where we left off yesterday. I mean, a firm close under the 20-day and then below the low that we saw in late March, 18,060, I think will confirm a complete kind of turn of events. But that's still some distance away. Watch the 20-day carefully first. On the Bank Nifty, the 20-day comes in at 43,503. And those are, again, I mean, that becomes an important reversal level to watch out for. On the way up, I mean, the Bank Nifty will eye the all-time high, which is around 44,151 point something. And that's a near-term upside level, above which, I mean, you can look for more upsides coming in. So, I mean, I think another middling kind of session. There are no real big tailwinds or there are headwinds, but the market's been kind of climbing the wall of worry. So let's see. Yesterday, the market sold off at open. There was a big rally which got sold off. There was a bit of a buying again. And finally, in the last 40 minutes, there was a final sell-off. So it was very volatile all over the place. And this morning, SGX is indicating another 45, 50 odd point lower start, closer to 18,240. Reema.
Hi, I was just checking that India, through all this, has been very resilient. If you pull up the week-to-date performance of India vis-a-vis its Asian, European, or even US market peers, you would see India's stark outperformance. The Nifty is up about 0.5% so far this week, while the key European markets like the CAC, DAX, and the FTSE are down anywhere between 2 to 3%. US markets, the Dow slipped for the fourth consecutive session, and this week Dow Jones is down close to about 2.5%. Even compared to Asian market peers like Hang Seng China, Hang Seng, by the way, is now at a 2-month low. India has starkly outperformed. So that's point number one. Today, of course, is the May series expiry, and it's been a good series so far. In the May series so far, the Nifty has seen a rally of 2.2%, and we've seen net institutional inflows of nearly 15,000 crore rupees in the month of May. So in the month of May, the FIs have nearly bought 20,000 crore rupees, while the DII selling has been restricted to 4,000 crore rupees thereabout. The Asian market picture is a bit mixed. So Hang Seng, China are both under pressure. There are concerns about this new COVID wave in China further hurting demand over there. So that's dragging Hang Seng in China lower. But Nikkei and Taiwan, Nikkei, of course, has been the rank outperformer, but Taiwan is also benefiting because the technology shares there are seeing buying after Nvidia came out with blowout numbers and guidance yesterday in the United States. So many of these chip companies, technology companies in Taiwan and Kospi are seeing some buying. So the Asian market picture is a bit mixed, but the SGX Nifty is suggesting a slightly lower start, currently down close to about 1/3%. But Nigel, we know, right, on expiry day, in the last hour, everything can change.
Well, that's right. The second half of trade is going to be volatile, particularly the last hour of trade. It's going to be a test for the bulls today, because of the kind of cues that we have. We have a stronger dollar, we have crude prices are higher, and the bond yields as well have moved up. So it's a bit of a test out there. The Nifty, well, we're moving to around the 18,400, 18,450 odd mark, and the bears are coming into fight. So that's going to be a crucial resistance zone. In terms of what the FIs did in the F&O market, well, they added yesterday some short positioning, close to 4,500 shorts. The short positioning is mildly in favor of them, 51% of the positions on the short side. On the index option side, well, they bought more calls than puts. But what's telling you at higher levels, you're likely to see supply, is the way they wrote calls yesterday. 1.3 lakh calls were written. And on the Nifty itself, 18,350, 18,300 call. Between them, there was close to around 90 lakh shares that were added. So there was writing being seen out there. But the kind of writing you saw from the FIs, you'll say it wasn't only the Nifty. The Nifty Bank as well, you're seeing that there was a fair bit of open interest built up. I was looking at the 43,900 call and 43,800 call. And it seems the bulls, well, they're trying. They're attempting to get past that 44,000 odd mark, but they're not succeeding in conquering that mark. Take a look at the last 5 sessions. Every day we go to that level. Every day 44,000 is the mark we hit, and then we come off that mark. So that's telling you that 44,150, which is the recent high, well, we'll like to see a bit of a resistance at those marks. If we can get past this mark somehow or the other, then in fact we're bracing for a bit of a bounce. Yesterday we came off close to 330 points from that point itself. So let's get straight to the levels then. The 20 DMA, that's around that 18,200 odd mark, but I'm looking at the 18,180 mark, because the 18,200 put has the highest open interest. And since today's expiry, we'll be watching out on that mark. The premium on the 18,200 put is around 20 rupees. On the upside, going by the options data and the call writing that we're seeing, 18,350, that'll become a bit of a resistance zone. On the Nifty Bank, 43,900, I'm not going to 44,000, 43,900 is a bit of a resistance mark that we are looking at for today's session itself, because the kind of open interest built up, we saw at 43,800. And on the downside, since the 43,500 put has a fair bit of open interest, I'm looking at the 43,400 odd mark. The SGX Nifty was indicating a bit of a subdued start, 45 points lower, 18,180. If you think, that the dip will be bought into, that becomes your crucial stop loss. You risk it, keep a stop loss of around 20, 30 points odd, and hope that you see a bit of a pullback. But sustainability is going to be a question mark, because yesterday as well, you bought the dip, you made some money, but you need to take some money off the table because we're in that sort of a range-bound market. Expiry day, so things will get volatile.
I think that we can be rest assured of, that there will be volatility, and especially on a day like today.
Markets aside, Prashant, did you watch the IPL yesterday?
I wanted to, Nigel. But
Brilliant performance by Mumbai Indians. Yeah. I mean, it was absolutely phenomenal. You thought they didn't have enough runs on the board. Yeah. And you come in there, they bowl their heart out, and wow, it was
101
great.
all out,
101 all out, against a Lucknow
I've
team.
not watched many games, but every game that I've watched, there has always been one kind of standout performance, standout player, and that's been I mean, actually pretty heartening to watch.
You know, I thought, like 4 years back, that maybe IPL momentum would wane a bit, the viewership.
Oh, no.
But now I've realized that there's a new cohort of viewers and fans, and that's my son and all his friends. So every morning when they get into the bus at 7 a.m., everyone is up to date. Who made how much, who bowled, who got how many runs, who was the man of the match. They're all up to date, and these are kids who are 5 and 6 years of age.
Amazing.
So there's a new breed of fans for IPL this time.
Absolutely, and good to see Mumbai coming on top yesterday. So good fight back.
Oh, absolutely.
One more match tomorrow. Tomorrow, 7:30, Mumbai Indians play Gujarat Titans. The winner will take on Chennai Super Kings on Sunday for the finals.
All right, well, we'll quickly tell you what's lined up over the next 30 minutes or so. We'll get you updates from markets across the globe. Dean Kim of William O'Neill will join in just a bit. We discuss the global setup with him. We get you CNBC TV18 list of top 10 stocks for the day. And at 8:30 this morning, Deepan Mehta will join in of Elixir Equities with a quick take on things.
On the equities, Ellen Zentner of Morgan Stanley says the FOMC minutes showed a split committee on how much more policy tightening is needed. A June pause will be hotly debated. They see a path to consensus on a pause that underscores additional tightening could be needed should the data be uncooperative. A softer May core CPI will be the final data in hand that will be tracked.
Okay, this is a local view now coming in. Samiran Chakrabarti of Citi kind of weighs in on the urban versus rural slowdown debate. He says, and I quote, labor market trend corroborate high-frequency data, which is still not showing any broad-based slowdown in urban consumption. While on the other hand, any upward momentum in rural economy is not getting sustained for a prolonged period, with core drivers there still soft.
Let's get you the money market views then. On the rupee, Parul Mittal Sinha of Standard Chartered Bank says the USD INR has moved higher in line with the generic USD move and unwind of the carry position. With the dollar yuan breaking levels of 7, there has been a rapid move higher in the rupee as well. The positive buzz around the USD INR continues, and 82.25 against the dollar remains the support and 83 against the dollar as the resistance, with reserve build-up having taken place in the recent weeks and macroeconomic factors much more positive than last time. The currency was at this level. An immediate break of 83 against the dollar looks unlikely. However, risk to the view is risk-off move in equities triggered by a debt ceiling stalemate or default.
Well, in bonds, Parul Mittal Sinha of Standard Chartered Bank says that domestic bond yields edged lower last week post 2,000 rupee note withdrawal. Rate market sentiment stays positive and cooling domestic inflation expectations of likely change in stance in June policy and favorable demand-supply dynamics in bonds in the near term. Parul expects the benchmark 10-year bond yield to trade between 6.9 to 7.05 range next week. U.S. debt ceiling decision and OPEC meeting could be the key drivers of rate markets.
Well, we have a lot of stock-specific action. We'll get to that in just a bit in our special Top 10 segment. But the stocks that we are looking at is LIC, Nykaa, Nalco, Phoenix Mills, Fine Organics Industries, Gujarat Gas, Piramal Pharma, and Borosil Renewables. They are stocks on the back of positive news flow. On the flip side, you have Oil India and JB Chemicals. That'll be on our radar, could react to negative news flow.
All right, well, we have Dean Kim, Head of Global Research Product at William O'Neill and Company, joining in now to take some questions. Dean, good to have you with us here. Thank you very much. I mean, the market is knocking higher, the Bank Nifty especially here, the Bank's index almost at all-time highs, and then flailing a little bit. What's your sense, Dean? The broader markets have got no such problem. I mean, they're still looking pretty good. Will we push through once this debt ceiling, etc., get out of the way to a newer high, or is something changing in the margin? Your thoughts?
Yeah, certainly the debt ceiling is a bit of an issue, but I think at the end of the day, they're going to come to some conclusion and agreement. So I think pretty soon we'll hopefully, I think we'll see some positive reaction from that. In the US, the big theme right now is large cap tech. So hardware and software continues to do very well. You saw the NVIDIA report. They had very strong numbers, and more importantly, they're guiding for extremely strong second quarter. So all of the AI-related names like NVIDIA, AMD, Microsoft, Alphabet, and others, they're keeping the broader index fairly elevated. And then, as you said, the market is kind of grappling with, at the moment, what the Fed is going to do in terms of rates. We've noticed that the recent May minutes, half of the team is indicating that they're not sure if they should continue to raise rates. At the backdrop, we're seeing inflation numbers continue to come down, but employment numbers continues to be very thorny. So I think at the end of it, as we near more towards second half, we should see the Fed sort of back off, and we're expecting a better performance in the market in the second half for sure. But we're kind of treading water at the moment. But it's good to see the index sort of holding up above key moving averages. Both S&P and NASDAQ, they're still trading above 50-day moving average. So that's great to see. And but if the index should break below that level, that's when we'll start to get cautious. But for now, we're keeping the market in confirmed uptrend.
Dean, morning. What about the Indian markets? After a stealth rally in April and the early part of May, the Indian markets have turned a bit sideways, at least at the key, indices level. How do you see the next 1 or 2 months and then the 6-month picture for the Indian markets from here?
Yeah, so, China is a bit of a concern. China has broken below the 200-day moving average. And obviously that's coming from, looks like they have a spate of COVID breakout, as well as the stimulus from the government isn't exactly pervasive throughout the economy. So we're noticing a lot of China-related names, like luxury goods, as well as even like Las Vegas Sands. They're starting to break down. But the rest of Asia, they're still holding up fairly well. So we have India, Japan, and Taiwan. They continue being confirmed uptrend, and Hong Kong and South Korea uptrend under pressure, and the rest of Asian markets are in rally attempt. So we think if China can kind of get through this little bit of a phase, the second half looks extremely strong. In terms of India, we like the action in India. The index is very, very strong, holding above 21-day moving average. So I think the 21-day moving average is going to act as very strong support. It's only 1% away. And then, should it fall below that, then you have the rising 100-day moving average that will act as support. So I think India, it looks very constructive. There's no reason to, really get concerned about India. Has been very strong markets, and I don't see any reason, other than softening from perhaps China demand, that, would make the index sort of falter. So I would say continue to look out for breakouts in India. There's a lot of ideas, and we will continue to invest there.
All right. Hi, Dean. Good morning. Dean, what do you make of the Fed minutes overnight? It seems we're split down the middle. Some saying that maybe, in fact, you require a couple of more hikes, hopefully not from an equity market perspective. And some in the camp that say, we'll pause now, and then maybe the interpretation is later this year we get some cuts. What are your expectations?
Well, I mean, it's interesting that, this is the first time that I'm kind of seeing there's a split vote within the committee. And I think that's coming from, if you look at the CPI or inflation numbers, certainly the core CPI is coming down. The stubborn factor was the shelter-related inflation, but that's rolling over pretty quickly. So I think the Fed should take notice of that. And the last bit of the hurdle that we need to get over is employment. So, we are starting to see some softening in the economy. And so that's going to translate or, filter through to employment numbers. We have Meta announcing another round of layoffs. So we think the Fed is going to take note of that. And I think it's going to be crucial to see what they do in the next meeting decision. But if they, stop raising rates at the next meeting, I think that's going to be taken very positively by the market.
Dean, thank you very much for joining in this early morning. We'll slip into a very short break. On the other side, our list of top 10 stocks is lined up next.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Welcome back. Thursday morning, expiry day, lots of individual stocks to react to in terms of earnings. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, we've got Surbhi on LIC. Surbhi.
Good morning. Thanks for that. So LIC reported a decent set of Q4 numbers. The mild positive surprise could be the expansion of VNB margin that they've seen on a sequential basis. The VNB margin expanded by nearly 500 basis points when you compare it to Q3. In Q4, they reported a VNB margin expansion, VNB margin of 19.4% versus 14.6%. The total APE was down 7% in Q4, but that was already known as the monthly business data was out earlier. The value of new business stood at 3,700 crores. On a full year basis also, the numbers were pretty decent. The total APE is up 13%, value of new business is up 21%, and the margins have expanded by 100 basis points. The embedded value growth came in at 7.5%, but that's mostly because of unwinding. So if you strip that off, the embedded value growth is pretty muted, but in line with what the street was expecting. What we have to watch out for is the commentary on the non-par savings product, and they plan to increase their share in that product segment. So we'll be awaiting management commentary on that front.
Thanks a lot for that, Surbhi. Remember, we'll also be in conversation with the management of LIC at 12:30 p.m. to discuss in detail their past quarter's numbers. Well, let's focus on a couple of other names. And Nykaa came out with a set of numbers. Mangalam, how were they?
Yeah, thanks for that. So, for Nykaa, the numbers weren't very different from the quarterly update that the company had given on the top line. So, a lot of the bad news was perhaps in the price. The good news, however, was that the EBITDA margins expanded both year-on-year as well as quarter-on-quarter. So, just to run you through the numbers, 33.7% growth in their overall revenue year-on-year. Of course, quarter-on-quarter, they were down around 11% on account of seasonality. Third quarter is a seasonally strong quarter. EBITDA grew by 83% on operating leverage year-on-year, so the margins improved by about 140 basis points. The company reported a decline in their net profit, and that's largely because of a tax expense versus a tax credit in the base quarter. In the segments, the beauty business grew by about 30% in their revenues. The fashion grew in late teens. This was a growth driver for the company, but they had indicated weakness in this segment in the fourth quarter itself. The other parts, which is male grooming, etc., grew over 258%. Of course, this was on a low base as well. The company, however, in the conference call said that beauty and personal care consumption trends are improving, and more importantly, the fashion GMV growth in FY24 will be similar to that in FY23. FY23 was 47%, so that also points at improving trends as well. So a lot of the bad news perhaps in the price, see green on the stock.
All right, Mangalam, thanks very much for that. You'll hear from Falguni Nair, Executive Chairperson, MD and CEO of the company, talk to us about those numbers at 9:40 this morning. Okay, let's move on from new age to old economy. Oil India will be in focus. Sonal is here with the numbers. Sonal.
Thank you so much for that. Well, Oil India's numbers in operational miss this time around, while the revenues were flat on a quarter-on-quarter basis to come in at 5,400 crore rupees. EBITDA declined 17.5%. The decline was expected. It was much more than what the street was working with. Margins declined by almost 1,000 basis points. Net profit was up 2.5%, but that was because of a higher other income component. They also acquired the Numaligarh refinery, and they have given details here as well, but for the entire fiscal. GRM for Numaligarh refinery came in at $19.8 per barrel versus $14.3 per barrel, and it aided the full year financials for the company as well. But for quarter 4, it was an operational miss.
Okay, all right. Thanks a lot for that, Sonal. Well, Nalco's numbers, actually very, very strong set of numbers is what we saw there. Revenue is much better, EBITDA as well better, margins better, and profitability as well better. So a few factors would have played out. One is realizations would have recovered on a sequential basis, which is good news. And costs have cooled off. The cost of power consumed, well, that was down by close to around 20% on a sequential basis. And that's the key reason that we saw a big recovery in profitability on the aluminum and alumina segment as well. So on a year-on-year basis, still the chemicals, which is the alumina part of the business, it's still down. But on a sequential basis, there's a good recovery that we've seen, and the street will like that. The profit number looked even better on the back of a better operational performance, low effective tax, lower finance cost, as well as lower depreciation. So these numbers look good. They have also declared a dividend of around 1.5 rupees to close the year. They're already declared close to around 3.5 rupees earlier. So thumbs up out there. Only problem is the global setup is a little bit muddled. So that's the problem. But otherwise, for the past quarter, numbers look very, very good. But Sonal, coming back to you, tell us some more quarter 4 numbers that you're tracking as well as some stocks and news.
Yes, so first let me start with the numbers. On Fine Organic, it was a stellar set for the company, a big operational improvement. And after some quarters of weakness, we've seen a comeback here. Revenues, they were down 3.3%, but operationally it was strong. EBITDA was up 27%. Margins, they expanded by almost 900 basis points, and profits were up 23%. The good part is that gross margins expanded substantially, 1,600 basis points on a quarter-on-quarter basis, 550 basis points on a YY basis. For Phoenix Mills, it was another good set. Their revenues were up 47%, EBITDA up 79%, margins expanded by 1,000 basis points, and profits were up 140%. Across all their segments, they saw improvement: malls, hospitality, and the small segment that is residential for them. Gujarat Gas also is in focus because industry sources are suggesting that Gujarat Gas has cut prices of industrial gas yet again to 38.43 rupees per SCM. This will be applicable from 1st of June. Now remember, it is around a 2 rupee per SCM cut, but this is the 5th price cut that the company has undertaken in the industrial segment since the start of 2023. That is because of lower spot LNG prices. They have been facing some competition from propane, and this will actually aid volumes for Gujarat Gas. So it's a positive for the company.
Okay, thank you very much for that. And for the final list of stocks, Ekta joins in. Ekta.
Thanks for that. Well, I'm going to start with Piramal Pharma because it is a strong Q-on-Q recovery for the company. Highest margins and revenue since Q4 of FY22. It's made a profit after 3 consecutive quarters of a loss. The company says that Q4 is generally the strongest for the company. But nonetheless, revenue 2163 crores versus 1700 odd crores last quarter, up 26%. The CDMO business is up 26% Q-on-Q. Complex hospital generics is up 37% Q-on-Q. Margins have recovered to 16.2% versus 5.1% on a Q-on-Q basis, and a profit of 50 crores versus a loss of 90 odd crores. JB Chemical, possibly a red on account of the profit miss. Revenue was up 22%. The street was anticipating a little higher in terms of revenue, but the domestic business continues to be strong, up 29%. EBITDA up 20%. Margins in line at 21.5%. Profit, however, at 87.63 crores versus estimates of 99 crores. Companies saw higher interest costs, but on a Q-on-Q basis, the cash flow has been so strong that the net debt has been lower. The stock also has rallied quite a bit, up 20% in the past 1 year. Borosil Renewables, the net profit up to 81% on a Q-on-Q basis, revenue up 26% Q-on-Q, EBITDA up around 84.8% on a Q-on-Q basis. The company is also looking to raise around 1100 odd crores. So all of this could probably result in the stock being in the green.
Thank you very much for that. Let's do a quick recap then of the top stocks this morning. Stocks with positive news flow are LIC, Nykaa, Nalco, Phoenix Mills, Fine Organic Industries, Gujarat Gas, Piramal Pharma and Borosil Renewables. Some stocks with negative news flow are Oil India, where there is an operational miss, and JB Chemicals. Now let's talk about what's happening in the world of commodities. Manisha Gupta joins in for a complete roundup. Manisha.
Thank you for that. Well, I'll start with the crude oil prices, where we have seen the prices gain up by 4% in this week. There is U.S. demand from road, air, and seaborne travel that seems to be picking up. And the surprise clearly comes in from the U.S. crude inventories, which have seen a decline of 12.5 million barrels. The gasoline inventories declined by 2 million barrels, so there is definitely demand coming in on ground. The Goldman Sachs report overnight suggests that supply deficit will start as early as June, and that led to nearly 2% of buying in the overnight market. But there is absolutely no buying when it comes to metal prices. So most of the metals are trading at a multi-month lows right now. Markets also reacting to the Fed May meeting minutes, where there is hesitancy to hike rates, but no plan yet to rate cut. So that is what is weighing onto the market. So you have copper, aluminum trading at a 7-month low, zinc at a 27-month lows, and all the other metals also closing into the negative, including gold and silver, which also are now trading at a 2-month lows.
All right, Manisha, thank you very much for that. So under a bit of pressure across the board. Deepan Mehta is director of Elixir Equities, and he'll join in for a quick conversation on specific stocks, with results, non-result names which are moving up in just a bit. We also have the management of Titagarh Wagons. The stock has been a complete, sheer outperformer over the last year, 2 years. The numbers came out. We'll understand the outlook for FY24 from them in a bit. Umesh Chaudhary, Vice Chairman and MD, Titagarh Wagons, also coming up.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
CNG car, there's no chance of storage.
If you get a CNG car, you've got to get a carrier.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
कैसे करते हैं ट्रेड? Try 5 paisa. Powerful charts and research tool. One-click trade is the new cool. Get access to live market data. Margin funding भी है रे बेटा. 5 paisa app करो install. Trading made simple, simple for all.
With 5 Paisa's wide range of products. यहाँ वहाँ चाहे हो जहाँ. Simply trade on the go.
ऐसे करते हैं trade.
सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. Hope you're having a good morning. For starters, the SGX Nifty suggesting a bit of red on the screen, but that's been the trend, right? Last few days have been a little bit muddled. Overnight, the Qs as well, not giving any conclusive direction, owing to that debt ceiling still needs to be raised, uncertainty on rate hikes as well. But let's see how it goes. Well, plenty of stocks to discuss, though. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good morning. Deepan, let's talk about LIC. You know, one of those bombed-out IPOs that came sharply low in comparison to the IPO price. But my colleague Surbi says the numbers look good. At these sort of prices, will you look at it, given that valuations are more or less attractive now?
Good morning, Nigel, and thank you for having me on your show. Yes, I did hear the report which was given by Surbi. But I think the concern here is that the embedded value, that rose just by 7.53%. And that is much lower than what the embedded value growth we are seeing consistently in the private sector insurance companies. It is usually in the high teens, sometimes even crosses 20%. And, tracking these insurance companies is very difficult, understanding them even more so. So I think one simple matrix to follow is the embedded value and the price to embedded value. And while I think LIC is very attractive on that count, but the underlying growth is extremely slow over there. And intuitively, I do feel that they may have lost market share. So if you're a value player, I think certainly LIC, checks those boxes for you. But on the whole, we prefer to buy growth companies, and the real growth in the insurance sector is coming through the private insurance companies, where we have seen that they've declared very good numbers and they continue to remain secular growth stories.
Right. Deepan, hi, good morning. Any thoughts on Bharat Electronics? I mean, I think that is one name where there are some post-results. Street is lifting estimates for FY24 between 5 and 10%. And earnings at the end of the day drive, prices, and upgrades drive prices higher. What's your sense? Do you like the name?
Yeah, good morning, Prashant. I think more importantly, earnings visibility. I think at a time when investors are looking at so much of uncertainty around global markets and commodity prices, and now even we are seeing some sort of a softer demand in the rural sector, especially when it comes to retail. I think that when you want certainty, then you need to go to the defense stocks in India. They have a clear edge because of their PSU status. And this entire indigenization program now is a reality, and it is moving very, very rapidly. So the opportunities for defense companies is growing by the day. And although valuations were not as cheap as they were maybe 1 or 2 years ago or so, but I think that even if P multiples are maintained at these levels, just because of the general increase in earnings per share, which could be in the range of 15 to 20% or so, those are the kind of returns that you can expect. And I think that would mean that these stocks are outperformers. So positive on Bharat Electronics purely on account of the earning visibility, and I would say reasonable valuations as well.
Deepan, any thoughts on Nykaa? The revenues numbers look good, 34% higher. There was an expansion in the EBITDA margin. And while the beauty and personal care segment is seeing very strong growth, I think their market share as well has gone up to close to about 28%, according to some estimates last year. So market share is higher, but their fashion business is still struggling on account of high competition. And the company is investing to grow their fashion business. Do you think that could be a drag on Nykaa?
Good morning, Rima. It is a drag on Nykaa. And I think that you're right, the competition is far more severe when it comes to fashion. There are many more players. And the kind of edge that Nykaa has in the BPC business, the beauty and personal care product, that is not getting translated into the fashion product. In the BPC business, they had a first mover advantage. They did many innovative marketing strategies, product presentation, and the entire platform attracted a lot of consumers as well as the companies which offer these BPC products. But that's not the case. That advantage is not there in the fashion and retail, the fashion business. So it's going to be a bit of a drag. I think that if you're invested in Nykaa as we are, as a measure of disclosure, you kind of remain invested. But nothing in the number that I saw today kind of encouraged me to increase my investment or recommend a fresh investment in Nykaa. On the whole, I think company is following through on its business plan to make it self-profitable.
Okay, so stay invested if you own it, but there is no reason to add to your holding right now or buy at current levels, just purely based on the Q4 numbers. But Deepan, you would want to listen to the management commentary. We've got an interaction scheduled at 9:40. But one company where the numbers look stellar were Titagarh Wagons. The revenue growth was 131% on a year-on-year basis. The company reported a profit of 48 crore versus a loss of 25 crore same time last year. For the full year, FY23, the company has reported an 89% revenue growth, benefiting from surging railway capex. That said, the stock too has done well, 45% higher year to date and more than 200% gain in the last 1 year. Umesh Chaudhary, Vice Chairman, Managing Director at Titagarh Wagons, is with us on the show now. Mr. Chaudhary, morning. Rima here. First, if you could give us an updated order book number. In Q3, I think your order book was about 10,100, 10,200 crores. What does that number stand at currently? And if you could break that up in terms of freight systems, passenger rolling, shipping, defense, and bridges.
Good morning, Rima. Thank you very much. So yes, in terms of the order book, there has been a significant jump on the order book, and we closed the year with almost 27,000 crore of order book, which includes our share of the bids that we have won in consortium in terms of the Vande Bharat bid and also the wheel project bid. So if we consider only our portion of that consortium, the order book is quite healthy at about 27,000 crore. And if we have to break it up into three segments, so first thing is that we have decided the name of the company has now changed from Titagarh Wagons to Titagarh Rail Systems. We got the shareholder and the ROC approval earlier this week. So now it is no longer Titagarh Wagons and Rail Systems, which is reflective of the change in the shift in the business strategy of the company. And we also decided this time to merge the shipbuilding, bridges and defense segment with the freight rail system segment, which we declared yesterday to the market. So we operate now in two broad segments, which is the freight rail systems and the passenger rail systems. The order book, I would say, on both the divisions is almost at an equal. If I include the wheels into the freight rail system, then the order book is almost split half and half.
Okay, 50-50, right? Between freight and passenger is what you're saying. So good morning, Prashant here. I just have Mr. Chaudhary, there is no doubt about the intent of the government. I mean, they're allocating a lot of money for rail capex, right? And markets are sort of allocating that, divvying that allocation up between companies in the space, and you are a prominent player. What about capacity, sir? I mean, to be able to execute and build these out in a very timely kind of fashion. So when you say you got an order book of 27,000 crores and that will only swell in the coming years, is there enough capacity with the industry? I mean, tell us about your sort of capacity, both in the passenger and the freight segment, and how you are upping that, because that will need to go up substantially for all of this work to be executed in a timely manner and for that to convert into revenues, etc. Go on.
Sure, Prashant. You're very right. Firstly, from your mouth to God's ears, let the order book swell further. As far as the capacity to execute is concerned, that's exactly what has been our USP. If you look at our revenue, annual revenue, about 4 or 5 years ago, we were at about 300 crores. We are at about 2,800 crores this year in a matter of 4 or 5 years. So we have always, we have demonstrated that we have scaled up our operations. Of course, the business is coming because of the tailwind that the government is providing. The whole Atmanirbhar Bharat Abhiyan, the Make in India, the focus on the infrastructure, the way the current government, the Prime Minister and the Railway Minister and the whole railway machinery is working, is actually kind of creating the platform for companies like us to be able to demonstrate our capacity and our capability. In terms of the future execution, there are different segments. So as far as the freight rail system is concerned, which is wagon business primarily, we have already scaled up our production to close to 700 wagons a month. I had announced that we would be targeting within this financial year to increase it to about 1,000 wagons a month. We are on track with our plans. We will be able to achieve that. As far as the passenger train or passenger rail system is concerned, we've already executed more than 50% of the Pune Metro contract. We will complete that during the course of the current year. Start with the Bangalore, start with the Vande Bharat. So we are pretty much on track in terms of all the capacity expansion or stabilization to be able to execute the orders that we have got. For the wheel project, it's a joint venture with Ramakrishna Forging. They are an experts in their domain, in the forging domain. So, we would be working together to set up a new greenfield project for making the wheels, which will take about, so the contract allows us 3 years to set up this facility, but we will definitely target to set it up faster. Right. So, long story short, I don't see
Mr. Chaudhary, I just wanted one number for the passenger coach segment. What is the monthly capacity and what will that go up to?
So right now, we are dividing our monthly capacity into two parts in the passenger rail systems. One is for the metro, which was earlier up to 20 metros. We are enhancing it to 36 metro cars a month. We believe that this capacity expansion will be over in the next 12 months. We've already started setting up the stainless steel metro facility. And then another 30 odd cars of Vande Bharat per month. So we are setting up a separate facility, separate line of production in the same facility. So all told, Our target is in 3 years' time, we should, from the current production level of maybe 5-6 metros, we should be able to go to about 50-60 metros. Or 50-60 coaches, sorry.
All right, Umesh, very, very quickly, what kind of a revenue growth will you do this year with the margin outlook?
So as far as the revenue growth is concerned, we have good order book. If you see that the segmental revenue, the passenger rolling stock or the passenger rail system has not been significant. I mean, it's still been about 500 odd crores in the annual revenue. We believe that has a lot of headroom to catch up. The freight would grow in a normal kind of manner. So we do not give any forward-looking guidance, but we believe that the growth should be good. If you look at the last quarter, we've done 976 in the last quarter. So on an annualized, of course, there's a large potential for growth. In terms of the EBITDA, we have always maintained that our business gives us about 8 to 10% EBITDA. We are at about 10%, 10.5% now also. So we believe we should continue with the same EBITDA guidance.
Got it. Thanks very much. Mr. Chaudhary, just to clarify the point, in passenger coach segment, both metro, non-metro, etc., it'll go up to about 700 to 800 in 3 years' time, a year. Coaches.
The capacity. Yeah, the capacity will be about 700 coaches in a year. That's right.
All right, got that. Appreciate you joining in and, let the order book swell, as I said, as we began the conversation earlier. Thank you very much. And, of course, the capacity to execute, I think, more importantly, as well as you've outlined. We'll take a quick break here. There's, 15 minutes to go for the market open at 9, the pre-open, that is. Anuj will be here in the studios with a quick check on things. And, of course, our own technical experts join in as well. Stay with us.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
You know, I was a bright student. I wanted to do something, to be someone.
Why not start something of your own? Start a business. That would require a big investment.
Zero investment.
Zero investment?
Yes, I am doing it. I am.
Principal madam.
She's my client. I am an LIC agent. Now think big. Become an LIC agent. Visit our website or contact your nearest LIC branch.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
ये स्नैक्स एंजॉय करने का नया तरीका है, स्मार्ट तरीका है। पर आपको पता है और क्या स्मार्ट है? इन्वेस्टिंग ऑन एंजल वन, जीरो ब्रोकरेज एंड फुल कन्वीनियंस। अब तो मैं सिर्फ फूड शेयर करता हूँ, ब्रोकरेज नहीं।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
Okay, welcome back. The SGX is on your screen. It's indicating a 50-odd point lower start. Anuj is here in the studios. Anuj, hi, good morning. You know, markets are starting to worry a little bit about the debt ceiling in the US, but politicians are saying, don't worry, we've got this.
Morning, Prashant. Well, politicians are the same everywhere, right? The market's worried about debt ceiling, and in India, we're worried about the bank nifty ceiling. I'll come to that. But there was a double dip yesterday. We spoke about the possibility of that the first dip normally gets bought, but it's the second dip that you worry about. And that second dip yesterday took market to lowest point of the day. And for second day running, we closed at the lows, which is clearly indicating that sentiment is slightly iffy right now. It's a market in which both buy on dips and sell on rallies working. And if you can play the edges, that's working. But as I said, it's the bank nifty ceiling which is hurting. Just look at the high of the last 5 days. Almost same. All 5 days, the high has been between 44,000 to around 44,050 or thereabout. And every day, the bank nifty has slipped between 100 to 300 points. At some point, this trade will break, but right now, that trade is working. X of that, actually, May has been one of the best series. The nifty is up 2%, but look at the other indices. Mid-cap up 5%, auto up 7%, IT up 6%, real estate, FMCG up 4.5%. Only the banks have been a bit of a problem point, and within that, HDFC Bank is the one which has really dragged the market. In terms of the Nifty levels to watch out for, the first support is 18,250-263, which is the options base and also yesterday's low. But I think the bigger support comes in at 18,141 to 18,198. 18,198 is a 20-day simple moving average, and 18,141 is a 20-day exponential moving average. That, I think, is the sacrosanct zone for the Nifty. On the Bank Nifty, the corresponding level would be 43,450 to 43,500, which has been the recent swing low, and also the 20-day exponential moving average. And I mean, the simple moving average plays at 43,326. On the higher side, the resistance is 43,841 to 43,900, which is where my sense is that today you might see some selling. And obviously at 44,000 to 44,100, which has been the high of last 5 days. As I said, at some point this trade will break, but for now, it's working, buying on the edges and selling at the higher edges.
Okay, all right. Thanks a lot for that, Anuj. Dipan Mehta is still waiting by. Hi, Dipan. Thanks so much for waiting by. I think you heard that conversation we had with Titagarh. But a couple of big numbers came out overnight, and some of those rank underperformers. Pyramid Pharma, disappointing numbers for the last many quarters since the time it's listed. It's a third of what it was on listing. Any view on the stock since now we are seeing some bit of margin improvement?
Yeah, Nigel, I want to look at the company more closely. I think it had fallen off the grid post the demerger, and then 2-3 quarters were extremely disappointed. It does have a slightly different business model in the sense that it focuses on contract manufacturing, where the revenues can be more steady and it is not that much impacted by slowdown or declining price in the US generics market. But we need to look at the company afresh and what its prospects are, especially how the consumer division has fared. But yes, it's an interesting number, the financial performance for the last quarter, and that certainly could act as a trigger for a turnaround the stock price.
Dipan, do stay on. We'll just re-invite our technical experts on the show now. Mitesh Thakkar and Sudarshan Sukhani are with us now. Morning, gentlemen. Mitesh, your first thoughts. Yesterday, you did tell us that even if there is a recovery in the market, you were not convinced of an up move. And in the second half of the trading session, markets did come off considerably from the day's high. We're getting another dip, possibly, this early morning. How would you approach that gap down opening?
Good morning. So I think, the idea is that the Bank Nifty was repeatedly failing around levels of 44,100, 150, which meant that the chances of a Nifty up move were slightly on the lower side or negative side. Not to mention the fact that the Nifty itself, was quite overbought with the rally, which has happened from levels of 17,600 or to about 18,450. And therefore, I think pullback was a much stronger outcome or much stronger possibility. And therefore, we were not very keen to buy into it. My belief still is that the markets is consolidating at higher end. Till 18,450 is clear, good chance that we'll test 18,250, and that could happen early in the morning today. But eventually, 18,050 to about 18,450 is the range which I'm looking at. So it's a 400-point kind of a range. We have hit the upper end of the range twice, and now I think there's a stronger chance of us heading towards the lower end of the range. So buying, I think I'll explore only once we get closer to about 18,100 levels, and then we'll take it from there. So for the time being, not trading with any kind of long bias on the indices. The Bank Nifty also, once it breaks 43,500, then I think it could get a corrective and possibly levels of 43,000 could be tested. Maybe even lower levels could be visited on the pullback.
Yeah. Mitesh, what about individual trades?
That's for me?
Mitesh, what about... Yeah, that's for you. Individual trades, Mitesh?
Prashant, after a long time, I have a situation wherein I have more of sell calls than buy calls. So I have 3 sells to buy. On the selling side is Federal Bank with a stop at 125.5 for targets of 118.5. HAL, I think, could give some kind of a pullback. The intraday chart suggests a mild decline. So sell here with a stop at 30.40. Look for pullbacks to about levels of 29.20. And some kind of breakdown has happened on the chart of Jindal Steel and Power. So sell here with a stop at 520 for targets of 485. The solitary buy call is Laurus Labs with a stop at 325. Buy this one for targets of 352.
All right, that's interesting. Buy on Laurus Labs. Well, it did move up 6.5%. It's been an absolute underperformer. So maybe there is some more to go here. There's a buy on Laurus from Mitesh. Sudarshan, what about you? Individual trades?
You don't want my Nifty?
Sorry, go on. Start with the Nifty and then go on with stocks.
All right. Well, I have explained that the Nifty is in a trading range. and that range is 18,060 to 18,400. Inside a range, the markets become choppy and almost unpredictable. You can toss a coin and say, I am a buyer or I am a seller. It makes no difference. Something will happen and that will be just random. So the trade is, and this is the same trade that I had given yesterday, wait for a dip towards 18,200 and that may come today. If that dip comes and the markets hold around those levels, buy with a stop under 18,060. We still are buyers because the market has not crashed. It's just in a range after a big up move. The Mag Nifty is a different story altogether. It's a very narrow range. It can break on the upside. It can break on the downside. I would suggest you just avoid it. For my stocks, I have Cipla, which is a buying opportunity. It's not just Cipla. It's a range of pharma stocks that have suddenly started saying maybe we are willing to go up. We'll find out. Cipla is a buy with a stop under 911. Liver is an intraday short. Hind Liver is an intraday short with a stop above 2400. Polycab is another intraday short. The stops, both Hind Liver and Polycab are in strong uptrends, but they are suggesting that they may be entering into a correction. Polycab is an intraday short with a stop above 34.15. NBCC is a positional buy with a stop under 40.
Okay, so both are experts suggesting that the Nifty is still in a trading range. Look at individual names. Thank you very much, Sudarshan and Mitesh, for giving us those calls. Get into a break. We'll come back with the pre-opening rates. We'll also be joined by Mr. Satish Pai, MD Hindalco, to discuss their Q4 earnings performance.